Good morning, and many thanks for joining this morning's briefing on the national accounts and international accounts results for Q4 2021. We also have the first view of the results for the year 2021 this morning. We'll take questions at the end of this morning's presentations, and can I ask people to use the Q&A function for questions, and also if you'd like to come off mute, if you put your name into the chat function, we'll be able to take your question in the room. So we'll see that the COVID-19 related restrictions have had an impact across all of the quarters of 2021, and the publication today of the Q4 results gives us that overall picture for the year. My colleagues here will take you through the annual and quarterly detail in this morning's slides. Just to say that these are preliminary results for 2021, and our annual NIE or National Income and Expenditure results due mid-year will give the more definitive picture for the year. Today's results are again showing strong growth in the M&E or the multinational dominated sectors. We're seeing growth of almost 22% for the year 2021 for these sectors, with all other sectors increasing by about 5%. And this morning we'll take you through the breakdowns that help us all to understand this M&E activity, what's happening also in the underlying domestic economy. So the slides from today's briefing will be available along with the statistical releases on the CSO website, and a recording of today's presentations will be loaded to the CSO's YouTube channel. Our contact details are on the statistical releases and on the press release as well, so please feel free to contact us at any stage after this morning or at any time during the quarter with any queries you have on the statistics. I'll pass to Chris Sibley now, who will take us through the results for Q4 2021 and the first look at the year 2021 from the national accounts perspective. Thanks, Chris.
Thanks, Jennifer. Good morning, everyone. So I have the national accounts results for you. We've obviously got the Q4 2021 data, but first I'm going to talk a little bit about the outturn that gives us for the year 2021. So the headline result for the year now is a growth rate of 13.5% with GNP of 11.5%, a little bit less than some people had expected, I guess, for the year, but that is a result of the Q4 data being down a little. That's quite strong growth, and we've watched the data, the M&E data grow throughout the pandemic and before that, in particular in case of the ICT sector. We strip out the M&E growth for the year. Modified domestic demand, MDD, is up 6.5% in 21, where it fell in 2020 by 4.9%. Another important metric at this stage is to look at the current price GDP data. So that's up now at 421 billion for the year 2021. That's an important metric. It's used for a denominator on various types of spending, and in particular the government debt and deficit statistics. And our colleagues will have those latest numbers for 2021 in a couple of weeks' time. If we compare our data to an available set of European peers, that 13.5% puts us out on the far right. We're quite accustomed, I guess, to looking at the Irish data on that side of the chart. The modified measures put us mid, the MDD, for example, puts us mid-table at about 6.5%. Looking at the output side of the accounts, all the value added that's generated from sales, we can look by NACE sectors there and see the dominant M&E industry and ICT sectors, and they're up quite strongly in 2021. The industry sector is up 24%, and information and communications up just over 14%. The more domestically focused sectors, public admin, education, and health, up 3.6%. And distribution, transport, hotels and restaurants, that's up 6.2% for the year. If we look at that data across time, indexed to 2015, and again on the website you can go in and use these graphics and toggle on and off the various series. We can focus on those key sectors, the two big M&E sectors, industry and the ICT sector. Industry growing in particular during the pandemic in 20 and 21. And information and communication growing all the way through the last 6 years. Then the domestically focused sectors, we've seen the effect, I guess, of the pandemic on those in 2020, and that's their outturn now for 2021. Distribution, transport, hotels and restaurants, a little up on the 2015 values, and construction up 18% on the 2015 values. If we weigh up all the sectors and look at M&E dominated sectors, as Jennifer mentioned, they're up nearly 22% in 2021 over 2020. And the domestically focused sectors are up 5% for 2021 over 2020. We have a suite of wages or COE data in our publication, and that data is showing quite strong growth across all sectors. So that's up 8.1% for the year 2021, with notable growth in information and communications up 13.7%, professional admin and support services up 12.4%, and construction up nearly 12% on the year. So that's current price. Wages or compensation of employees data, and that's quite heavily related to what we see in terms of the income tax data at current prices. If we look at the expenditure side of GDP, so this is measuring GDP value added by looking at consumption, government spending, investment, and net exports. That gives us that black line for GDP at the top, which we see growing at 13.5%. We strip away the M&E activity, and again, you can toggle these series on and off on the CSO website. We can take away the net exports, and we can look at modified investment. So we can build up the measure looking at personal consumption on goods and services in blue, and adding government expenditure in green. And then the difference there is the hatched area, which is our modified investment number. And that brings us up to modified domestic demand. And that's where we see the growth in that of 6.5%. What's interesting, I think, there in the modified investment number throughout 2021 is the increased spending on computer hardware. So within the machinery and equipment data that we give out, we can see large spending, particularly in the second half of 2021 on computer hardware by businesses. Within the expenditure measure, we can look at consumption, and that's up 5.7%. At constant prices, evenly split between goods, which are being dragged down a little bit by lower spending on cars, and services up 6.4%. With the focus throughout the last number of months on increased prices in the economy, it's probably worth taking a moment just to mention deflators. We don't normally spend too long looking at the deflators to get away from money terms or current price terms to constant prices, or what you're used to calling the real GDP rate. And we can do that perhaps looking at the year for consumption. In current prices, consumption's up 9.4%, but then we take the price effect away, the constant price number is there at 5.7. So that difference between current and constant prices looks quite similar to what you're seeing in CSO's consumer price index. So that's the example of the deflators used in the national accounts to take you from money terms to real or volume growth rates. So we can look at underlying activity. We talk a little bit more about that at the mid-year press conference when we look at the longer time series. If I look at investment in the quarter, this is a little bit difficult because of IP that we have coming through in the data. But for the year, investment is down, but within that, we can look at a couple of the factors. Building construction is down 3.4%, mainly driven by the non-residential, the other building and construction down 3.4%. When we move into machinery and equipment, we've got to take the aircraft data out at over 1 billion and look at the underlying machinery and equipment data. That's where there's some interesting figures. That's up 17.7% for the year, 2021 and 2020. And that's what I mentioned about the computer hardware data, quite strong spending or investment on computer hardware throughout the second half of 2021. Looking at investment or capital formation over time, you can see the issues we have around intellectual property in the intangibles numbers there in orange, and that we're trying to look at the other series on building, construction, and machinery and equipment without aircraft to get the modified cap form numbers. The last piece of the expenditure side of the accounts is, of course, net exports, and that's continued strong growth in that throughout 2021, similarly to what we saw in 2020. So on both sides of the data, we see strong exports of goods and strong imports of services data. But I'll leave the details on that to my colleague John, who'll explain the international side of the accounts. If we look at the contributions to growth So the total here on the right-hand side for 2021 is growth of 13.5%. We can see the domestic element, the contribution of modified domestic demand falling in 2020 and increasing in 2021. And then we wrap the M&E activity around that to build it back up and show you the total contribution and how we get to the 13.5%. The transition then to GNP, we need to take away what's largely the M&E profit outflows, but the net factor flows from Ireland at 110.6 billion, and that brings us down to GNP, which has a growth rate of 11.5% for the year. So just to take stock of the annual data that we were able to look at for the first time today, that's a GDP growth rate of 13.5%, a GNP growth rate down the bottom there of 11.5%. We have two ways to measure GDP, the value added from output or sales and expenditure, all the money spent in the economy. On the output side, we can see the strong growth in the M&E sectors, industry up 24%, and information and communication up 14.1%. A mixed picture on the domestic side, construction is down 4.7%, distribution, transport, hotels and restaurants are up 6.2%. Weighing up the M&E sectors in total versus the domestic orientated sectors, the M&E sectors are showing continued strong growth at nearly 22%, while the domestically focused sectors are up 5%. On the expenditure side of the accounts, consumption's up 5.7%, government expenditure 5.3%. It's difficult to look at the investment and the net exports numbers because of the IP, but when we strip that out, we can work towards our modified domestic demand measures. That's building up consumption, government expenditure, and modified capital formation. And that's what gives us our modified domestic demand figure of 6.5% growth. And that's a figure we can compare then to the other side of the accounts, the non-M&E dominated sectors at 5%. It's showing the two different ways of measuring the domestic part of the economy for GDP. So to move on to the latest data we have for you is the Q4 2021 figures. And our infographic for the quarter gives you the seasonally adjusted quarter-on-quarter GDP growth rate down 5.4%. The top of the infographic shows you the output method for GDP and the bottom shows you the expenditure method. The two key facts there are the industry data, down 12.2%. On the other side, it's a fairly flat set of exports numbers. So those two things are what give you that overall seasonally adjusted quarter-on-quarter GDP fall of 5.4%. While the industry data is down for the quarter, the other sectors, smaller, albeit smaller, they are up. Information and communications up 7.8%. Construction is up 6.2% quarter-on-quarter, and the distribution, largely domestic distribution, transport, hotels and restaurants sectors up 2.6%. On the expenditure side of the accounts, consumption's down slightly on a seasonally adjusted basis, down 0.3%. Government expenditures up nearly 1%. And again, difficult to interpret the investment and net exports numbers. The imports are quite strong. We would have, I guess, expected to see stronger exports to balance that out. But the key feature on that side of the accounts is the weaker exports to give you the overall result. And when we strip out the M&E activity, the headline for modified domestic demand is up 1.3% for the domestic economy data. So we can see those over time, the GDP data that's down 5.4% in the quarter, but we see that it was up the 3 quarters before that and down in the fourth quarter of 2020, some volatility there. But the modified measure without the globalization activity for the quarter is up 1.3%. Looking at a set of available European peers, this is a seasonally adjusted growth rate. So with that, the timing issues, I guess, around some of the M&E activity, it puts us on the far left, the fall of 5.4%. If you took the modified measures, we'd be, I guess, in the middle of the right-hand side of those that cross-country data. So looking at the quarterly data at the different sectors and what's going on, we can see that the very large industry and ICT sectors, industry is down 12.2%. So you can see how that weighs on the overall result, while the other sectors, many of the other sectors are showing growth. Looking at those sectors again across time. Again, on the website, you can simplify this to pull it down to just the sectors you want to look at. We can see the effect of the fall in the industry data in Q4 2021. And I'd probably interpret that view as, it's a very, very strong year of growth for the data. And it's perhaps just taking stock of the values of some of the exports data there for the very largest M&E companies. And that's where we're getting that fall in the fourth quarter. But still a very strong result for the year. If we look at some of the CSO's high frequency data from our business statistics, this is from the Industrial Production and Turnover Index. We can see this, how it flagged the quarterly result to us with the fall in October in that index, explaining the industry result, I guess, for the quarter. And similarly for services, we can look at the CSO's monthly services index and see the rises and falls across different parts of the economy. Accommodation and food services down on a seasonally adjusted basis, in particular in December. Likewise for professional, scientific, technical, administrative support and other services. So while up in some of the earlier months of the quarter, they're down in the later months, giving us the overall results we see in services. When we take all the sectors together and look at the M&E dominated data versus the domestic focus sectors, we see the M&E data is down 8% in the quarter, while the domestically focused sectors are up 1.9%. So that's a very similar result, that 1.9, to what we're seeing on the modified domestic demand on the expenditure side. As I mentioned, we have a suite of new tables for you on wages or compensation of employees. We've shown you some detail on those in the last number of press conferences, and they're all in the publication. One of the features there, in particular the quarters, is looking at the wage supports as a share of the overall wage bill that we present here to you. And that's fallen in the quarter. The wage supports have fallen in Q3 from 4% to 3.4% in the fourth quarter of the year. But the overall data on compensation of employees is up 1.9% in the quarter. Looking at the expenditure side of the accounts, this is looking at consumption of individuals and goods and services, government expenditure, investment, and then net exports. We see the overall fall in the black line for the GDP number. Then we strip away the M&E activity and we build it up again to see our modified domestic demand measure. So that's consumption, government expenditure, and modified cap form to get up to the MDD figure. It's worth mentioning again, I mentioned it with the annual results, but that hatch there you see for modified capital formation, that's the strong growth we're seeing in Q4, just like we did in Q3 on computer hardware. So within machinery and equipment, we're getting a strong result throughout the year for computer hardware. And the components of the expenditure method, personal consumption is down slightly on a seasonally adjusted basis at 0.3%. In particular, it's cars that are pulling down the expenditure on cars, pulling down the goods figure there. If we look at a set of available European peers for the consumption data, a slightly different measure than our domestic measure, but it puts us mid-table in terms of consumption by households, on individual, on goods and services, in the middle of the set of European peers. If we look at that consumption data using the CSO's monthly retail sales index, that explains that essentially flat result we're getting on consumption, up in some months and down in others, across a range of different services that people spend, goods and services that people spend their money on. On the investment side of the accounts, this is a little difficult to look at in the quarter. Building and construction's up quarter on quarter at 9.4%, while machinery and equipment is down. Cars are dragging that down, but as I said, the computer hardware is bringing that up. Intangibles in the quarter is making some of the analysis a little bit difficult. And if I just show you the time series on that, you'll see we've got more IP coming into Ireland in Q4 2021. So that makes some of the year on year and the quarter on quarter comparisons difficult. That's that orange part of the bar chart on the far right hand side. On the net exports, the fall in net exports is what we're looking at on the expenditure side of the accounts to finish off the expenditure measure. Weaker exports is probably the summary item there, while we're seeing the strong imports of services data. But again, I'll leave that to John to talk to you in detail about in the international accounts. Looking at the contributions to the minus 5.4% fall, we can see the domestic activity in blue, the rises in the smaller, I guess, rises and falls in that, the rise in Q4 2021. We wrap the M&E data around that to show you the overall result by adding the green part of the bar chart there to get the overall result of minus 5.4%. Then in the transition to GNP, we have to take off slightly smaller profits this quarter at 23.3 billion, and that gives us our GNP fall of a growth rate of fall of 2.1%. It's worth just taking a moment. We've shown annual growth rates for 2021. We've looked at the seasonally adjusted quarter-on-quarter data. I'm just going to show you two slides looking how does Q4 2021 compare to the same quarter in 2020 and the same quarter in 2019. So that point in time, Q4 2021 is 9.6% up in GDP terms on 2020 and 14.5% up on 2019. And we can strip away the globalization activity and look at modified domestic demand. So this indicator has performed really well for us throughout the pandemic, showing us what's going on in the underlying domestic economy. And that's up 9.8% for Q4 on the same period in 2020 and 7.4% up on the pre-pandemic Q4 2019. So that's just stepping out of the analysis to look at it a slightly different way for those who are interested on some of the levels pre and post pandemic. But I'll just finish on the seasonally adjusted quarterly data. So this is Q4 2021 over Q3. This is the latest data we have, and that's showing us a result of GDP down 5.4%, GNP down 2.1%, and the output side of the account, it's industry that's driving that result, down 12.2%, a big sector in the economy. We weigh up the M&E sectors, they're up, down 8%, and the domestic focus sectors are up 1.9%. On the expenditure side of the accounts, consumption is down marginally 0.3%, government expenditures up 0.9%, and we have again difficulty because of the IP looking at investment in net exports. And when we look at a modified measure on the expenditure side to get at the domestic economy or domestic activity, that's up 1.3%. So again, we're comparing the 1.3% modified domestic demand to the non-M&E data on the other side, growing 1.9%. So I'll finish there and hand over to my colleague John to take you through the international accounts.
Thanks, Chris. So now I'd like to take you through the international accounts for Q4 2021. So firstly, we can see here our infographic, which gives a really good summary of the quarter. We can see our goods exports of 73 billion euro, our goods imports of 31 billion euro, and these give us our goods surplus of 41.3 billion euros. We have services exports of 83 billion, services imports of 99 billion, and these give us a services deficit of 15.8 billion. And our income inflows are 33 billion, while our income outflows are 57 billion, which give us our net income outflow of 23.9 billion. And these all combine to give us our current account balance of 1.5 billion euros or 1.4% of GDP. Looking at how this activity is funded, our net international investment position at the end of 2021 is minus 580 billion euros. And our stock of foreign direct investment in Ireland stands at 1.2 trillion euros. And we will look at each of these in more detail over the coming slides. Firstly, I'd like to look at the preliminary results for 2021. So we can see a merchandise surplus for 2021 of 172.9 billion euros, which is up 28 billion euros on the 2020 figure. Our services balance is minus 3.1 billion, which is up 58.8 billion on the services balance of minus 61.9 billion in 2020. You can see the large variability in our services balance across the 3 years. And this is largely driven by differences in IP imports between the 3 years. Our net income outflow is 111 billion euros, which is up 18.1 billion on the 2020 figure. And these all combine to give us a current account balance for 2021 of 58.8 billion euros. Looking at our current account balance as a percentage of GDP, we can see that this has been quite stable for the last few quarters without IP, but we can see a bit of a dip this quarter due to the IP imports. But they're not on the same level of IP imports that we saw in Q4 19 and Q1 20. So our figure for Q4 2021 is 1.5 billion euros or 1.4% of GDP for the current account balance. Looking at the quarter a bit more closely, we can see our merchandise surplus of 41.3 billion euros, which is an increase of 6.2 billion on the same quarter last year. Our services balance is minus 15.8 billion, which is down 10.3 billion on the same quarter last year. And again, this is largely driven by differences in IP between the two quarters. And our net income outflows are 23.9 billion euros, which is an increase of 5.2 billion euros on the same quarter last year. And these all combine to give us a current account balance of 1.5 billion euros. Looking at this balance over time and the constituents of it, we can see the quarters with the large negative services balance, that green bar below the line are the ones with the large IP imports. And we can see the very large green bar in Q4 19, Q1 20, and a smaller bar in Q4 21, but it's still sizable. So comparing this quarter to last quarter, our merchandise surplus is down 4.5 billion euros, and our service balance is down 20.6 billion euros, changing from a surplus to a deficit. Our net income outflows are down 3.3 billion euros, and these all combine to give us a change in the current account balance, which is down 21.8 billion euros on last quarter. Looking at the constituents in a bit more detail, our merchandise exports are 72.7 billion euros, which is up 8.8 billion euros on the same quarter last year, while our imports are 31.4 billion, which is up 2.6 billion on the same quarter last year. Service exports are up 8 billion on the same quarter last year, while our service imports are up 18.3 billion on the same quarter last year, again driven by the increase in IP imports. Our primary income inflows are 30.8 billion euros, which is up 6.3 billion on the same quarter last year, while our outflows are 53.3 billion, which is up 11.1 billion on last year. Looking at the part of these that are direct investment related, so direct investment profit and interest inflows and outflows. The inflows are 10.4 billion euros, which are up 3.1 on the same quarter last year, and the outflows are 31.1 billion euros, which are up 8.8 billion on the same quarter last year. So looking at our goods, imports and exports, we can see that our goods exports are up slightly quarter on quarter, but are up compared to the same quarter last year, while our goods imports similarly are up compared to last quarter and last year. So while we're seeing an increase in imports and exports, the increase in exports is stronger. So the increase in net exports is being driven by this increase in exports. Looking at how this breaks down into international trade, goods for processing and other, we can see that our international trade and goods for processing exports have increased both compared to last quarter and compared to last year. Our merchanting, which is a net export, is down compared to last quarter, which is the unwinding of the increase we saw in Q2, but it is up compared to the same quarter last year. On the import side, our international trade is up compared to last quarter and up compared to last year, while our goods for processing imports are down compared to last quarter and down compared to last year. So we can see that the increase in net exports is driven by the increase in exports, and that this is split between international trade and goods for processing, with the goods for processing having a larger share. Moving on to our services, we can see, comparing our service exports to last year, an overall increase of 8 billion euros and a computer services increase of 8.9 billion euros. So we can see that the increase in exports is largely driven by these computer services. We have a decrease in business services of 1.6 billion euros, and this is largely driven by a decrease in R&D exports, resulting from comparing with an unusually high Q4 2020. Within this as well, we see increases in operational leasing exports of 141 million euros. Looking on the import side, we can see an overall increase of 18.3 billion euros compared to last year. And this is largely driven by the increase in business services of 12 billion euros resulting from the IP imports. But it's interesting to note we're also seeing increases in royalties of 5.4 billion euros. And looking at these royalties in a bit more detail, the blue line here gives us the total royalty imports, while the green bar gives us the amount of royalty imports related to the pharma sector. And most of the difference between the two of these is related to the ICT sector. So we can still see here the fluctuations in Q3 and Q4 in royalty imports. But this quarter, royalty imports overall have increased compared to last quarter, and pharmaceutical royalties have also increased compared to last quarter. And comparing to the same time last year, we're seeing an increase in pharma royalties, which is up 2.1 billion euros, and an increase in overall royalties, which are up 5.4 billion euros. Looking at direct investment income, we can see inflows of 10.4 billion euros, which are up 3.1 billion euros on the same quarter last year, and outflows of 31.1 billion euros, up 8.8 billion on the same quarter last year. Looking at how the outflows break down, we can see that the income on debt, which is the blue section, is fairly flat as per usual. The yellow section, which is our dividends outflows, have increased, but there's only a small decrease in the reinvested earnings. So these combined give us the overall increase in direct investment outflows. And looking at how these break down by sector, we can see that compared to last quarter, there's a decrease in the manufacturing sector, which is down 696 million euros, while there's been an increase in the information and communication sector, which is up 2.3 billion euros. And compared to the same quarter last year, we see an increase in the manufacturing sector of 5.5 billion euros and an increase in the information and communication sector of 1 billion euros. Looking at our current account with the UK, the trade balance with the UK has increased by 2.1 billion euros, and net income outflows have increased by 1.3 billion compared with the fourth quarter of 2020. And these combined give us a current account surplus of 1.4 billion euros in the fourth quarter of 2021, which is an increase of 917 million from the surplus of 490 million in the fourth quarter of 2020. Moving on to our financial accounts, we can again see low levels of net transactions in comparison to previous quarters, with direct investment abroad increasing 41 billion euros, direct investment in Ireland increasing 17 billion euros, and the net direct investment increasing by 24 billion euros. In portfolio investment, we see an increase in assets of 144.6 billion and an increase in liabilities of 144.7 billion, which combined give us a net decrease of 22 million. And in other investments, our assets have decreased by 24.3 billion, while our liabilities have decreased by 8.6 billion. And these combined give us a net decrease of 15.7 billion euros. Moving on to our net international investment position. At the end of 2021, our position is minus 579.7 billion euros, which is an increase of 6 billion euros on the end of September 2021 position. And this is driven by different changes in different sectors. So to summarize, our current account balance in Q4 21 is 1.5 billion euros or 1.4% of GDP. We have again large IP imports this quarter, and our COVID-19 effects continue with lower tourism exports and imports, largely netting out for the current account and lower transport services exports. So now I'd like to pass back to Jennifer to summarize.
Many thanks, John and Chris, for taking us through the results. We've had a lot of data presented here this morning, so I just wanted to pull it back together, some of the headline results from both the quarterly and the annual figures today. Looking over at the quarter 4 versus quarter 3 2021 results, we have the contraction of 5.4% GDP and 2.1% in GNP, driven a lot by that contraction in the industry sector, multinational dominated regulated industry sector, just over 12% there. Also looking at modified domestic demand in Q4, increase there of 1.3%. Again, important to look at that modified indicator in Q4 versus the traditional domestic demand indicators because of that intellectual property import that happened in Q4. Personal consumption expenditure, which we always say is a very important indicator of what we all spend on goods and services, small contraction there, minus 0.3% in Q4. But standing back and looking at the year, we have that very strong growth of almost 22% in the multinational dominated sectors, driving GDP growth of 13.5%, and we're seeing GNP growth of 11.5% also. Modified domestic demand in the year up 6.5%. And then as we drill down into our own spending on goods and services, we have that 5.7% increase in personal consumption expenditure for the year. And that varies over the quarter of the year. You'd see it in the quarterly results as the impact of the pandemic related restrictions affected consumption over the quarters of the year. Okay, so many thanks to colleagues. And I'll just check, we have a few questions already.